It looked like each one of the participants had a very different approach to the relationship with the banks. Can you tell us a little bit more at what is the perspective from DuPont on this?
So if I think about it from the risk side, we evaluate our credit exposures or our cash exposures with a robust process that considers not just ratings but also CDS levels and a bit to our capability of understanding what are the underlying risks that a particular bank that we do business with has. And then we make choices about where we can take our exposures and where we would like to not have exposure to that bank. On the relationship management side, we clearly have an important credit facility in which we have a list of banks that we use for that. We work hard to balance the effort of work across our banks that support us in the credit facility. And we also evaluate and have continuous dialogues with our banks around what they do well for us, where they could improve, and where we need new things in the future. And one of the conversations we have with many of our banks is we're a global company growing in emerging markets, and we need our banking partners to be there to support us wherever we're growing in the world. So it's a way to integrate our banking partners and help them understand our strategy and provide services that support that strategy.
And maybe sometime also looking on the banking side for partners in countries where your usual banks are not active?
So we work hard to, wherever we can, to align with banks that we have relationships with in some way, shape, or form, even if it's through a relationship that they have with local banks. Absent that, we look hard at understanding where the strengths and risks are in local banks. What we all learned in the financial crisis is that your bank is important to your risk assessment and your protection of the capital in your company. So we ask many more questions and look at what the risks are as we make decisions about different activities we engage with local banks.
Now, one of the things that you mentioned is the fact that given the size of DuPont, you have had major acquisition, major divestitures. How is that affecting the Treasury activity?
Well, it makes for very exciting project work and very exciting work in general. But we have, as you say, we acquired the Danisco business back in 2011. We divested our performance coatings business just at the beginning of 2013. And now we've announced that we will be spinning into a separate public company our performance chemicals business. And so all of these transactions are outstanding opportunities for Treasury to get in and help support the separation of the business or the integration of the business, and to really set up the right capital structures and cash flows to immediately have an impact on either the acquired business or setting up for success the divested company or the spun company by helping them have very efficient cash management structures, inter-entity funding structures, liquidity structures.
And then innovation. The last few years have been quite interesting, but what role plays innovation now in treasury and cash management?
Well, DuPont is a science company, so innovation and new product development is fundamental to our growth. You've probably heard many people from DuPont say that and have seen that in our results. What I would say for Treasury is that we continue to find ways to support the businesses in their growth and in their need for financing or creative support to grow, whether that be in global reach or whether that be through partnerships or M&A activity. On the other hand, I would say within the Treasury function itself, we are always pushing ourselves to do things more efficiently, more standardized, more effectively around the world. And in that way, we're able to more quickly react and be agile for the needs of the business anywhere we're doing business.